The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome everybody back. Another episode of the Apartment Gurus coming at you, the end of 2023-ish, getting into the third quarter here, or fourth quarter rather, or towards the fourth quarter, and looking at all the changes that we've seen just in 2023, and really it's obviously the kind of one of the big elephants in the room as you're looking back over the last 12 months is the emergence of AI in the mainstream in so many different industries and different applications. If you spent any time in the business sector of Instagram, it's all AI these days. The tools and platforms that are available to be highly productive through use of AI is really, just the tip of the iceberg in terms of the changes we're going to see, the transformations we're going to see within, obviously, our industry specifically, and the world in general is mind-blowing, right? Mind-blowing potential. And even the experts don't really know 100% what it's all going to look like. So that said, this mastermind event in New Orleans that I mentioned on a couple of these past shows here recently, and was talking kind of in depth with some guys that really know high level what, have a perspective on what's going on high level inside of our space in the AI world. And a mission, if you will, to bring some of that to the podcast here. We've never delved into AI really at all, even as a productivity tool. So this is kind of a first for us. And I'm lucky enough to be joined by Andrew Dunn out of sunny Las Vegas, Nevada, and he's joining us again through this mastermind network that I've talked about quite a bit here in the past, which again, your network is your net worth, guys. Like it's huge stuff to be a part of powerful networks and masterminds, really, however that looks. And we've talked about that a lot in the past. But Andrew has a private family office and has a lot of knowledge in a lot of different asset classes in the investing space. So Andrew, super excited to have you on the show. Welcome, man.
Hey, thanks, Tate. Appreciate you having me on.
Yeah. So for the listeners, if you wouldn't mind just giving us a little kind of background into you, and specific to like maybe the last stretch of your real estate career and kind of how you got to what you're up to today, and then can't wait to hear more about what you're up to today.
Yeah, man, no, I really appreciate you again having me on. So I've been in the business for a little over 5 years, always been in Vegas. I've done deals in Reno, Phoenix, looked at some stuff in Utah, Southern Cal, been in Hawaii, Florida, North Carolina. Again, like you said, I came through a private family office who was asset class agnostic. So like in short, or in the labor terms, like we're just deal junkies and we chase yield. So again, I've done land banking, land entitlement, self-storage, retail, industrial. We just did an office to industrial conversion, again, retail development, multifamily, mixed use. Again, really it's truly asset class agnostic, and kind of why I really dove into the AI sector is I believe that it's just going to continue to grow. If you believe that we're going to continue to produce and consume data, they're going to need a place to store this data. And a lot of people kind of retract back to the cloud. Well, the cloud isn't something that's theoretical in the sky. It's actually a bunch of data servers locked in like remote areas, connected to fiber optic cable, and all your data actually goes into these data centers that have to be very strategically positioned because of their water and power demand. And again, if you don't have access to a specific type of water or, enough abundance of power and redundancy of that power, and also like you have to withstand Category 5 hurricanes, you can't have really any earthquakes. You have to preserve these data centers. Like out here in Las Vegas and in Nevada, we have a company called Switch that went public a couple years ago. They're kind of the main data center group that services California. And you're going to continue to see these guys grow. They have like a 50-year expansion plan. And I think the thing is, like when we did these like megabyte like chips originally, they were massive for 1 megabyte. Dude, now you can get terabytes on like something that's the size of your thumb finger.
Right. Yeah.
And that's just kind of technology. Yeah. Now with data centers, they haven't really seen that capability come back to fruition. Like the size of these actual physical products inside these data centers, it's still the same. Their actual power capabilities have skyrocketed. So we're now October of 2023.
Right.
In the last 4 to 6 months, kind of when OpenAI really hit the mainstream market and kind of everybody's using ChatGPT, data processing usage is 3x in the United States. So what does that mean? When you measure a market, like commercial real estate is measured in terms of square footage, like office, industrial, retail, and multifamily or hotels are measured in like how many units or how many keys are in a property. In data centers, it's measured in terms of megawatts. So it's not measured in terms of like actual square footage or keys or units. It's measured in terms of power output and power availability, specifically dedicated to these data storage places. We've converted back in Miami, the family office that I worked for, so which 30 years ago, they acquired a hotel and turned the ground floor basement into a data center. So the company I've been with has been doing this for over 30 years. Our experience with it, we're chasing it right now. We own about 50 acres up in northern Nevada next to Tesla, Switch, Google, Microsoft, and Apple. And right now we're testing with NV Energy our power capabilities to target a data center usage. It's in this place called the Tahoe Reno Industrial Center. We have 50 acres under ownership. And right now we're targeting for data center usage. Now, what does that mean? Dude, I'm trying to do either flip the land for our basis, because these guys, like for a traditional industrial warehouse, I'm probably building out to 100 to 130 a foot, like core, shell, grading, site, finance, TI, everything to get to a stabilized building today. I'm probably $120 to $130 a foot. If you throw in a data center for that exact same building, a TI is ranging in $150 to $250 a foot alone just for their TI. So they are investing in hundreds of millions of dollars for these buildings in comparison to a fraction of the cost for an industrial TI is $8 a foot, maybe 12. So you're talking about a 10 to a 15x on just the TI. So these guys are like, I don't care. I need to control my land. I need to control my process because I have security and demand of my secret data or whatever data I'm hosting for my clients.
Right.
So again, we're trying to hit it on the different nail on the head, more on the operational side. And I could also touch what I do in, just kind of the day-to-day content creation, market research, and kind of data analysis, and where I see AI going in commercial real estate. But that's on the forefront of kind of like how I'm doing data and applicable uses to CRE. Like it's really data centers. And to me, data centers today is what Flex Industrial was 5 to 7 years ago.
Wow. That's a big statement right there.
Yeah.
Especially when you look at what happened to Flex Industrial in COVID, right? Like, it's been the darling of like the last 3-4 years.
Yeah.
In a lot of ways. So to say that about data centers is significant. And, you and I connected on this in New Orleans a couple weeks ago. And and it really was my first kind of glimpse at this asset class, right? And that's essentially what you're describing as a new form of commercial real estate asset class here. So yeah, super exciting. I guess, it kind of begs the question, like, where for, a listener, so, somebody that's like looking at this, or even a passive investor that may be looking at your projects, or projects like yours, what do you look for? Like, what's the, you mentioned water, right? I know that's a big thing. It's all about cooling
cooling the racks.
Yeah, totally. So,
and it's a specific type of water. It's like purified water. It's not reclamated water. That's kind of like repurposed sewage water. And you kind of need some more of like a purified water to go in through everything, so that there's not a lot of gunk coming through. And then they need to be able to export that waste out. Like for our users in the Trick, Colorado Industrial Center, they can export for like a 300,000 foot building. They can export about 25,000 gallons of water a day. That's the required allotment. But again, when I look for a site to go there, which is where I think you were going, to me, it's all about power. I don't really care about anything, because you look at these land trades, I've seen dirt sell for $10 a foot, and I've seen it sell for as high as $50 a foot for data center land. And to me, again, it's all about power accessibility. So when you look at sites, the hierarchy of these data centers, the top is safety of location, meaning what industrial disasters am I environmental disasters or natural disasters am I looking into? Hurricanes, earthquakes, fires, etc.
Flooding would probably
be flooding. Exactly. Now, all those things, right? The next thing that I go into is power accessibility and how quickly I can get to that power. So I'll take you, just because I'm working on a project, I'm not just trying to speak my book, it's just because I live this book, is we deal with Nevada Energy, which is a Berkshire Hathaway company owned in the state of Nevada. Now they have a full-on monopoly in the state of Nevada. It's the only power company you talk to or use. And so for us, they have in this area in northern Nevada, their voltage output is about 110,000 volts. They have a project under works that's delivering in 2026 called the Green Lake Project for Nevada Energy, which it starts in Yerington, goes down to southern Nevada, and then goes up to kind of Ely area. So it's a giant triangle like the state is. Now, the important thing with that factor is that I have to basically wait for all this power to come in demand, but that project is going to supply 335,000 volts of power into the marketplace. So to give you a perspective, there's a company called Tract out of Denver that just acquired 2,200 acres in this park. And they're asking for a 2 gigawatt demand. Currently, it's a megawatt demand. So when you see all these reports, it's in megawatts. A gigawatt of power can supply 750,000 homes with power. This guy just wants it for his data center. So you will see data centers take on the grid. And this is the true impact in commercial real estate and in our everyday lives. You will see that data centers will become the largest power usage of any kind of grid system in existence today. And because you have to think about it, electrical vehicles. So all those Teslas that are running around with data, collecting data for their autonomous vehicle usage, all that data is being stored in the grid and inside these data centers. So when I look at those sites, again, natural disaster protection and viability. So the racks, they say electrical power is the next main thing, because I need to have that abundance of power, and I need to have excess power today, because it's not just the power I need to be able to use for my facility. In case there's an outage, where's the redundancy of power so my systems never shut off?
Right.
So again, natural disasters, so naturally stuff doesn't break down because it's a building. Second is that redundancy of power to make sure that my systems never turn off, because these are 24/7, 365 operating systems. And if anything goes down, that's how you can experience when you're online on the internet, maybe some glitches or just some slow running, kind of system loading, on your open browser, on Facebook or Instagram. That's because data centers usually shut down. And so that's just killer for people's businesses, because they basically pride their clients on reliability and security of their power. Then I go into water. What's my accessibility to water, and what's the quickest path to getting it? Is it sub to my site? How far am I pulling it down? How much water can I intake? How much can I exit out of? And then also just kind of like any climate restrictions, because again, you're using a lot of power on these guys' grids.
Yeah.
So that's what we look for. And then also just as a normal developer would, what's my path to development like? Like, dude, our path to development up in Trick, I get a grading permit in 30 days. I get a permit in 4 to 8 weeks to build my building. So again, my path to development is very quick. So that's how I'd answer that question.
So many different ways we go with this. I mean, you look at the power usage thing alone, like, is just, that's a whole huge conversation right there. I mean, you talked about the massive, a gigawatt demand from 750,000 homes worth of power from one data center. That is insane. That's, and you're right. Like every year, the next fleet of electric cars, that whole new group, it's increasing exponentially, just numerically. Then you add the data that's being created just in that thing alone. It's mind blowing to think about. I guess. Yeah. I'll kind of look at you here, like for a commercial real estate investors' purposes. Kind of let's look at maybe where opportunity could be. There's obviously opportunity in just passively investing in stuff like this, which is often like the perfect place to be anyway. Like in a lot of these structures, and certainly a lot of our deals and whatnot, the multifamily deals we do, our passive investors have an awesome position in the deal as far as the equity split and preferred payments, et cetera. So I'm sure there's great passive investing opportunities available here on the horizon. But yeah, talk about maybe that a little bit, and then talk a little bit about, maybe more owner operator oriented stuff, or even land. You mentioned right out of the gate, the land deals, like kind of the land development aspect for you that you look at first. Maybe a bit about that too would be great.
Yeah. So, when you try to talk about the position here, again, like why this position is like flex industrial 5 or 7 years ago, is because there's maybe an abundance of space in certain markets, but now it's really consolidating, and the supply chain is getting very stressed because of the demand with all these AI companies and like this AI boom that we're currently going through. The demand for data centers are rapidly increasing, just like flex industrial was. Like, so nobody's built a lot of these things for an extended period of time. Well, now they're building them out and they're going at a rapid pace. But what's that going to do for landlords and developers? It's going to give you control of the supply chain. But this is like what's funky is, if you have an operating data center right now, you're basically sitting on gold plus platinum plus silver all combined. Like, you might as well call it like just a very precious resource, because just from a development perspective, to get the switchgear capabilities to meet these power demand thresholds for these data centers to last, 10 plus years, the switchgear is 3 years out. So I might have some guy just buy my site or sign a lease. Doesn't matter. That building's not getting built for 2.5 to 3 years and being delivered and getting up and operational, because these systems that are being constructed overseas or locally aren't even being delivered. If you're familiar with development at all, a normal switchgear for an industrial or multifamily building or a retail building, they're at minimum 6 months to 15 months out, just for regular building. For these high level, like high power usage switchgears, they're 2.5 to 3 years out. Now, the point of going back to your question of like the demand and how can somebody capitalize on it, if you have something that meets their demand today and meets that something for that smaller data user today, they're going to need it no matter what, because they're just trying to grab market share and footprint. So you have the golden goose. Like, you will probably see people pay you more than what your building's worth on like them trying to do a lease, because they just want to own it. They don't want to be in like how maybe some of these cannabis tenants or, alternative asset class tenants like cold storage are, where they're at the mercy of their landlord because there's just not a lot of product out there, because it's an alternative asset class to real estate.
Yeah.
So again, go find the data center REIT like online on the public stock exchange. Go find developers like me, or like these institutional guys like that are specifically chasing this asset class. If you yourself want to go out and do it on a more active approach, like, you have to know your market, you have to spend money. So like for us, like, what are we doing on our site? We hired utility contractors, like consultants, to go on our behalf to NV Energy to submit a power request and a power demand to say, how much power can we get to our site today, in a year, in 2 years, in 3 years, in 5 years, in these different increments of 10 megawatts, 20 megawatts, 50 megawatts, 100 megawatts, 150 megawatts. And you go in increments of 10 megawatts, not really 15 megawatts, to like understand power output. That's how they do it, at least for Nevada Energy. So again, you have to spend the money on consultants. You have to spend the money on the market research. It's a heavy upfront lift. Like if you don't want to spend the next like year of your life before you even make your first acquisition, like I'd suggest just finding people like myself to go in and invest passively.
Yeah.
And go from there.
Right. Because you're probably just at some point you're reinventing the wheel with an asset class that there really isn't that much like intellectual material on, right? Like it's not like you can go on YouTube and get, literally millions, probably hundreds of thousands of videos on mobile home parks or storage, right? Or certainly multifamily, right?
Yeah.
Data centers, it's probably there. I'm sure it's there. And I'm sure that, there are people like you that, and you're doing stuff like this. So it's getting the word out, right? But it's certainly nothing that, it has hit my radar before meeting you a few weeks ago. So, which I'm not saying I totally have my finger on the pulse all the time, but doing this show twice a week and having a mastermind and being part of a couple masterminds and all that stuff is this to me is like you said, that just to kind of circle back around, Flex Industrial 5-7 years ago, like here in Utah, if you had been working that side of things and working on those land deals and putting those projects together, you would have done real well. Because as we all know, COVID kind of consolidated a lot of commerce and specifically retail commerce into online commerce and delivery based service and that sort of thing. So these small warehouse spaces are awesome. So it was a trend that hit hard and fast. And okay, so let's look at there's got to be just specific parts of the country, specific states. I mean, obviously Nevada sounds perfect. They're not only like physically well set up for it, it sounds like in a lot of ways, but they also want it. It sounds like because they're making it easy for people like you to get what you need to get the.
Yeah, you also got to remember, like for Nevada, so Northern California is the second largest data center market besides North Virginia. North Virginia is the number one in the country.
Got it.
I don't know about the world. I'm only focusing on U.S. But like again, for these data centers, you're going to have them in Brazil. You're going to have them in Chile. You're going to have them in China. You're going to have them in Shanghai. You're going to have them in Australia. You're going to have them everywhere across the entire world. So this isn't just like, again, it's like with warehousing, like everybody kind of needs industrial logistics and warehouse to get supplies in and out of the economy. Right. So when you say like Northern California is great until you realize that the state doesn't give you any tax benefits. So Nevada, we don't have a state income tax. We don't have a floor tax. We have like a very tax-friendly environment. Mm-hmm. And so that's kind of where it would be. Again, it's like, where's the cheapest power? Seattle has a great market for it. Again, another no income tax, state income tax state. They have a lot of power usage because of kind of like their access to water power out there and hydro. So they have an abundance of power kind of out there. They have some pretty good land thing. I think they're just going to run into more environmental issues as like development occurs. So I'd say for that, again, like I kind of want to talk about some of these demand drivers, mm-hmm. what actually kind of like going back to like, okay, we talked about electric cars and electric vehicles, but I'll tell you the 5 top things. I'm just checking my notes here. Internet of Things. So everything that you plug into your walls, that's any smart device, an Alexa, Google Echo or anything like that, those all have data storage, and every single time you speak into that thing, it's another data point. Mm-hmm. And so that has to go inside these data centers. Autonomous vehicles we talked about, artificial intelligence we talked about. One thing that people kind of forget, virtual and augmented reality. Mm-hmm. Again, so Meta has gone across the country and it's like glommed up acreage, just like on the outskirts of Nashville, outskirts of Ohio, like Columbus, Ohio, central, not really into Texas, a little bit more north, like into Nebraska, again, Nevada, Hawaii, just kind of like all these different places, and basically just grab kind of market share and footprint, just kind of like a lot of these industrial logistics groups did for future development capabilities, just to kind of control the market share for everything. And then also place in their request ahead of time of their competition for their power requirements and power demand. But these are just, and also another data demand driver for data centers is 5G. Right. So I don't think any of us think 5G is going anywhere. It's only going to continue to need more data points. And that's like the beauty of 5G. Like the better and more data and more connectivity you have with more of these data points and connections, the better 5G is going to work and the faster it's going to move. Mm-hmm. So again, like,
and then there's whatever's next after 5G, right?
Yeah.
The next generation of that looks like, for sure. Yeah.
So again, like when I just think of some of these places, I'd say Northern Virginia, Northern California, Northern Nevada. Phoenix has a pretty great footprint that they're growing on.
Did you know that we have in just south and west of Salt Lake City, probably 45 minutes southwest, we actually have an NSA data center.
Yeah.
Huge, like can't even really get close to it kind of facility. Like when you see it from a distance, it's massive.
Yeah, I also know you guys also have one of the largest secret underground military bases in the world outside of Western Utah, right out by the Salt Lake beds. I've gone out there before to kind of troll around. Like, you guys got so many military equipment. Utah is a great place for it. I think Salt Lake will continue to grow. Again, you guys just have
water's a massive issue here.
Yeah, so that's where I think it's not going to do well, is because your guys' water for your guys' reservoirs. I mean, now if it's skier, I know Park City, you guys will get your Olympics, but we'll see. I don't know about data centers. Chicago is another great market. Toronto. Again, maybe going to some of those colder climates. Again, they have the cold, but dude, data centers, like, it's just about power output in that cold. Mm-hmm. You're not really dealing, and you can just kind of insulate these buildings to withstand that temperature variation.
Yep. So makes total sense.
Yeah.
Oh, dude, I can't. To me, the elephant in the room here is like, if you go totally big picture with this, and this probably, I'm just curious what your thoughts are, but it seems like desalination and micronuclear power production have to happen for so many different things on this planet to work. And this is obviously, data is like this at the core of everything that happens on this planet now.
Yeah.
You know? So,
I mean, data is the new oil. Are you going to ask me, like, how do you think we're going to get the power to supply these things?
Right. Yeah. I mean, and I'm not afraid to admit, like, I'm pretty much in like a closet environmentalist. Like, it's always been a thing for me, like, to be, in integrity with the planet that supports us. Basically, just kind of always made sense. So, and renewables are obviously fantastic, and as much as we can make them, great and fantastic, right? But I mean, we're talking about power consumption, the scale which, like, I mean, what do you think? 5 years? Are we 10x from where we are now?
Yeah. More? So, like, I'll just look at the report that I have pulled up, kind of in the back, designed by Avison Young, and I'll send this to you. When you look at where the like power is going to go, so currently the market today in 2023 is 123 zettabytes, which is, I think, over 1,000 gigabytes. If I had to kind of put it around to it, I might be botching that, but so that's 2023 today. We're at 123. By 2026, they expect that number to be 221 zettabytes in demand. Like, okay, so when you talk about it, because I'll back up here real quick. I do gas station development. I develop gas stations. And the number one thing I get from investors or from people, if we want to long-term hold these gas stations, is like, what about EV charging? And I was like, show me the grid infrastructure. Show me the grid infrastructure. I was like, the California requirement, like, where they don't want any more gasoline vehicles sold, like, full on by, I think, 2030 or 2035. There's two different hurdle horizons and milestones for that legislation. I kind of laugh in their face, because they can't even create incentivization for these power companies and utility companies to upgrade their infrastructure. They're requiring them to shut down power plants. Mm-hmm. And so when you look at the alternatives to the power that they're getting, so it's hydro from dams, it's solar,
And that's a mess in the West, West
right?
Mississippi, total mess right now. Yeah,
exactly. And it's like, and then you talk about wind, which is a joke to me because the cost versus power output, you're a net zero, not in a net zero positive way. And like to replace those blades versus the power that you get paid in return, it's a break even.
Right.
So it's a horrible thing. I don't believe in wind at all. The one that I do believe in that's classified as clean energy is geothermal.
Right.
There's a lot of more geothermal plants than the nuclear power plants, and that type of thing that I think will come more on. But it all goes back to the grid. Like that's the problem. It's where's the grid, and thinking in deep in infrastructure projects to be able to sustain this development. Because right now I just don't see it. And you have too many environmentalists in California and Utah that basically prohibit these types of energy producers like nuclear energy or geothermal because you're disrupting the environment. Or coal and gas plants. Like where our project is, I'm within 2 miles to a coal energy plant. And, okay, well, guess what? Without those, you don't have your data centers, you don't have your industrial logistics facilities. You keep it contained to a certain environment, and you have those like hazardous cleanup protections in place to be able to sustain that. Again, to talk on environmentalists, we're avid members of the Nature Conservancy, Sierra Club, those guys, conservation land groups. Again, we're all avid outdoorsmen in our company, and we really value that, and we're diverse as well. So we really believe in our land. It's just trying to consolidate that and be able to push for it. Again, I believe in oil. Again, we're talking on a computer screen. We're in office buildings where we talk on our phones, headphones, mics. They all come from oil. So if you consume any technology project, you need oil. And it's just where are you getting that oil from and how is it manufactured, fracked or whatever. So again, you're going to need it. We're not going to be able to achieve these data center requirements without that infrastructure and those like high octane energy production sources.
Yeah. Well, it seems like to me, and this is way beyond my area of expertise, and we'll move past this at some point. But it seems to me like the power demand increase that's probable or even like definite on the horizon will almost like demand. I mean, will at some point surpass like fossil fuel even capacity at some point. Like it again, this is me going like to that really progressive, like a small nuclear, micro nuclear type generation.
Yeah. Real quick before you go there, because I had to look it up because I know I get fact checked on this.
Yeah.
A zettabyte is equal to 1 trillion gigabytes.
Oh, wow. There you go. That's huge. Yeah.
So, I mean, like if you want to talk going back to that demand, like that's an insane amount.
Yeah.
That's just disgusting. Holy crap.
Yeah.
I mean, I think there's definitely that possibility, but again, it just depends. If I were to say where I'm looking at future sites, because we might lean into this pretty hard as a niche and asset class across the country, is I'm looking for pro-development, pro-infrastructure communities. Who's investing in their infrastructure? Not thinking like tomorrow. They're thinking 20, 30, 40, 50 years out to make sure that these companies can withstand those power requirements as they upgrade their demand. Like as they upgrade their supply to enhance that demand, be able to capture that demand. So if you're, again, it's the same thing kind of what you think I look for in multifamily. You don't want to be in tenant-friendly states. You want to be in landlord-friendly markets. You want to be in pro-business, pro-development markets that are enhancing growth. You don't want to be in rent control environments. Again, it's the same thing for this. Who's supplying the power? Who's in support of the nuclear energy production? Who's support of power production and energy production to be able to meet these demand drivers and be able to have good dirt? Just go chase good dirt. There's not a lot of that left anymore.
Right. All right. So huge questions. Obviously, for listeners and myself, what's our best bet on going to learn, first of all, learning more about you and your team and your strategy and what you're already doing and what you're looking to do? What's our best bet there?
Yeah, so you can reach out to us at our company, vacdevelopment.com. It stands for Value Add Cowboy Development. Again, fits the profile being kind of deal junkies. You can DM me on Twitter or Instagram or TikTok at Andrew M Dunn _. And then, dude, I post newsletters, I post blogs, I write things to our investor community. I post things online, and then stuff that's only available to our investor community. I will be writing a little bit more about data centers to get that traction. I do podcasts just like this. So again, just tuning in, listening to groups like this, or get me on more podcasts if you want to see me connect and collaborate with somebody else. But that's kind of how you find me.
Awesome. And then, like, I guess bigger picture, as far as, learning more about the industry, learning more about the asset class, and, the opportunities inside of those. Do you have any, any direction you'd point people in that regard in terms of resources?
Yeah, I'd go to 4 companies right now. Avison Young, big CRE brokerage. They actually have a national data center team that's looking. We're in touch with those guys. CBRE and JLL. I think JLL and Avison Young probably have the best reading sources. Just go on their website. You can see kind of what's driving these demand, these market reports, understanding the data center market, understanding what drives the data center market. And then also do Goldman Sachs. Talks a little bit more on like kind of the liquid investing side for like an oil person, like what stocks to buy, or what companies are really kind of available for that if you want to be a passive investor and just try and bet and capitalize on it. Because that's the thing is, like, you can buy tech stocks, but what about the infrastructure? Like, it's the age old, right? Like, oh, everybody's going for the gold rush, but who made the most money? The guy that supplied the shovels and pickaxes.
The infrastructure guy, yeah.
Yeah, the infrastructure guy or the tool guy, right? And that's where I think really these data center companies are allowing you to do. Again, I think AI has the capabilities to do. We didn't even talk about kind of more what I see it impacting the world is more efficiency in business. Like, you want to go there? Like, it's just depends.
Yeah, 100%. Actually, we do have a few minutes. I kind of wanted to close that part of like the investor, especially the passive investor side in that look. But I can't help you're here, dude, and like you know so much about this stuff, and so I have to ask you about AI in general, the impacts on particularly our industry. You shared a little bit with me, like you guys, if I remember correctly, you actually have an operating data center at this point, right? That you're working with.
We had one, we sold it, and then we're building one.
Right.
So that's fine. That's where we're kind of at. So
and you guys had niched into some specific industries, right? If I remember correctly. So yeah, talk a little bit about that, and then big picture, kind of where you see all this going.
I think the biggest thing is data analysis. For us, like having an analyst go through and compile lease comp data and market data, and understanding and qualifying like, hey, where's an arbitrage in the market? I think you will really see through just data points. Like, if you're a property management company, like for us, like that's my long-term goal, is to acquire a property management company and scale that property management company and take all the data points I get in from every tenant, the debt, the equity, the operator, etc., and compiling it into a centralized database and using artificial intelligence to forecast markets, forecast defaults, forecast expansions, renewal probability, and having a deeper analysis on the beginning on your front-end acquisition is going to continue to be prominent. And especially for us as developers, there's a platform called Northspire, where you have all these different data points from these different construction budgets for these different projects, but there's obviously no project is exactly identical, but they do rhyme, and there is overlap in taking those different data points, and they'll forecast a budget for you that's pretty accurate. So you don't have to go and have an analyst go back through everything. They're just turning over inputs. They're helping you process paperwork better. They're helping you manage your files a lot better. They're coding it for you. They're filing it for you a lot better, so that they understand your habits. And that's what AI capabilities for me we're seeing, try to utilize in our business, is creating efficiencies through Monday tasks that you normally outsource to a virtual assistant. And again, investing in that, because the AI is going to learn. And the beauty of AI is it's not going to quit. It's not going to take a vacation. It's not, you don't need health benefits. You don't need anything. I don't mean to be crude in that.
Right.
But it creates efficiencies in all entrepreneurs' business. And I mean, we're all kind of like startup kind of guys in our business, trying to bob and weave, just really find and identify profitability in our businesses. Well, dude, AI allows you to do that at a very low cost benefit. So I do think you're going to see AI at these like JLLs, CBREs, these companies that are betting big on it to forecast market growth, forecast population trends. Hey, this project came in here. How many jobs does it actually impact? So cooperating with your like economic development and getting those data points, those lease data points, the comps and everything, and understanding like who's going to trigger a sale before the broker gets to it, or helping a broker identify that sale, or getting that lease comp and saying like, hey, like I understood, like, cause we do ground leases, the last 10 7-Elevens we did were at X. Well, it's now X plus 5 or X plus 10 because we know where the like cap rate expansion's occurring. In order for us to justify this development to go get a loan, like that's where we're going to have to get to then be able to, hey, you know, blast out email packages to lenders or to equity groups, you know, and saying like, hey, like this project is identified with these equity groups. This project is identified with these lenders, you know, and just being able to pull that data in real time. And then dude, like even talk about it in content production. ChatGPT is great. We use a thing called Jasper.ai. Yeah. I love Jasper. I love the chatbot. And like, this is how I've been using Jasper for, I think like 2 years now. I've been using Jasper, and just to see the growth in Jasper's production and just evolution as a platform, it's truly parabolic. Like it's truly like, it's maybe a little bit better. It's kind of worse. It's a little better. Like, oh man, dude, like this is great. Oh man, like this is amazing. Like, wait, it can do that. I'm even now seeing it in Canva through more of the image and video graphic stuff, and like honestly helping you create pitch decks and say like, hey, like this is a good pitch deck that you've done. Like this has like investor feedback pretty well. There's new AI tools. I think there's one called mock.ai, which will take a long form like format video like this, like what we're doing, and it will take on trending keywords in different social media platforms and create the 15 to 60 second video clips, slap on subtitles on it that you get to choose, and give you a virability score on increasing like what is the chance of virality. Like,
that is insane. That's so next level. And it seems to me like, I mean, it's like at some point here really soon, if you're not doing this stuff, it's like you know, 20 years ago, you weren't using email or whatever, 15, years, right? Like, but which can be overwhelming, I think, to some people, maybe some listeners, right? Like, where do you even start, right? So based on that, and I think you actually kind of already touched pretty nicely on where do you start, right? You start with productivity, stuff that you would normally outsource to a VA, so efficiencies, productivity, organization, stuff like that. But I guess for an owner operator, lead sponsor type investor, that's out doing maybe capital raising and deal sourcing, that sort of thing, where does one start integrating AI at any level?
All right, so before you can run, you must walk. Before you walk, you must crawl. Yeah. First and foremost, if you don't understand how to teach and you like AI and actually understand how to give AI the right prompt or message, you're wasting your time. So in my first personal opinion is you have to invest in yourself to take the time to understand how AI thinks and grows. Because you just saying, hey, AI for Greenlight Equity Group, write me a market study or an article on X, Y, and Z. And it's like, well, you're going to get a shitty output. Excuse my French, excuse my language, but you got to say, act as a social media influencer who specializes in financial underwriting and create an article for Greenlight Equity Group, which is an equity group based in Salt Lake City, who does X, Y, and Z asset classes and X, Y, and Z markets, and relate a newsletter or blog post to our investors describing the top 5 things of how AI can impact their business or how multifamily investing can impact their business. AI feeds off of data and how you facilitate a question. And again, for me, I'd say understand how AI thinks first to understand prompts, or hire or pay somebody who understands how these prompts work. Jasper's pretty great. They have an enhanced prompt feature and allows people to get an understanding like of how to like actually produce a solid prompt. I think, again, use it in your productivity and like your data oriented task. And I think go through there. And again, if you don't have a database for data inputs of lease comps, of sales comps, of land comps, building comps, or whatever, or like even a news like funnel of like, hey, this infrastructure, like this project just got announced. Hey, this project just got funded. Hey, the county just approved this project. Hey, that approved that project. It's also creating like maybe a score of like database of like, hey, these projects are all happening in our area, so that's a better investment. And this is how we can actually quantify the growth and like upmarket like rental growth in this area, because we're buying in within a 1 to 3 mile radius of all these different employment projects or, you know, retail projects for multifamily, so that like they can go shop and eat and consume, you know, or like how many of these people live within a certain area, and like actually taking for retail, like what we're doing, a deeper dive into demographics and actually predicting eventually, we're not there yet. We're trying to understand it to actually for a retail tenant, not just looking at sales data and demographics, but facilitating from us what tenants have the highest profitability and performance for that specific location and what tenants are missing. So for retail developers, it's a great thing. So you can take the demographic data, you can take all the tenants in the submarket, and you can actually identify which tenants should be in that submarket and creating a pitch for that tenant of why they need to be on your corner or on your location.
Oh man, it's so powerful. I mean, just that. I mean, it's like every application you point to is just next level.
Yeah.
Super highly leveraged intelligence, right?
Yeah. And it thinks faster. Dude, it thinks faster than you can. The last thing I'll say is like for retail, you know, everybody talks about like the minimum wage in certain markets, like in California or New York or whatever.
Mm-hmm.
Think about like just going back to the data center usage for robotics. Like, dude, these robotics companies and these retail centers, like if you're even any developer and how like AI is going to impact real estate, if you're an industrial, you better plan for automation in your facilities. So you better be going out to those power companies and getting 3 times the power requirement that's demanded today, so that you don't become outdated in 5 to 10 years by the guy who thought way ahead of you. Because I'm telling you, Amazon's doing automation. Everybody's doing automation. They don't want the turnover in training. And so you have to think, even for retail or industrial or office people, for any automation that they might use, you have to have the power capabilities to fulfill that demand, or they're going to find somewhere else for somebody who is thinking way ahead of you. And so it doesn't just impact data centers, impacts industrial, impacts retail. And so you have to be able to have that. And same thing with multifamily. Dude, automation, like the Internet of Things, like that increases more of a higher power output for these multifamily properties.
100%. Not to mention EV chargers potentially.
Yeah,
like that.
Exactly.
100%.
Exactly. So again, you got to invest in places with a good grid and good infrastructure coming forward.
Yeah.
You got to think long term.
Yeah. Man, dude, wow. Amazing. Like just, I feel like we could like do 6 sub episodes from all the things that came up. I mean, really.
I could dive deeper into any one of those. We're just trying to be general, high level, educating the community on it.
Yeah, no. And hopefully, you know, for listeners here, like, and I think I'm very confident that this is the case. Like that there's such, we always try to stay pretty high level and give you guys as much of a, like a kind of a comprehensive view, especially when we're talking about something new like this, a new asset class, new conceptual stuff. But we also want to dig into like why it's important, right? And what you can do to capitalize on what's happening, monetize what's happening, to just straight up be, you know, catch that wave in whatever way you can and feel inspired to. And, you know, I think there's a lot of different like signposts in this episode that you can go back to. And by the way, I don't think it should be lost, Andrew, what you went through on prompting Chat GPT, or I guess would that have been Jasper? Who would you have been?
Love that.
Any of them, right?
No, any of them. I mean, seriously, if you don't know how to talk to AI, you're not going to get the highest output of AI.
I mean, that was gold. Yeah. Just that example of the level of detail that you need to go to get, you know, a maximized output from AI. Like such a valuable example there. And, you know, so listeners, go back and just listen to that. But then also check out, like if you Google or do a YouTube search on AI prompting or prompts, there's tons out there. And
oh yeah,
Instagram search too. Like anywhere you look, when you start looking for this stuff, it's there 100%.
Yeah.
So awesome stuff, Andrews. Okay, so listeners, again, vacdevelopment.com. That's Andrew. And then again on your best social media for you.
I do. I like Twitter. Twitter's been like one of my favorite platforms recently. So if you DM me on Twitter at Andrew M Dunn _. That's me. I like talking on there. I like the written content. There's a great real estate community, long reach. I'll answer for any of them, but those are probably the most prominent.
Great. Awesome stuff. Yeah. So listeners, there you go. Tons of different places you can go with this one. And this won't be the last show we talk about AI, I'm sure. In fact, it'll probably just be here in a year, probably part of every show about in some one form or fashion, right?
Hey, one day you're going to do a podcast with AI. And you're 100% AI. And it just is, it's a very different dichotomy. Like I always say this, so it's like, well, is this a fad? And I'm like, no way. This isn't like crypto, and like, yeah, crypto, you can go so many different ways with it, like, and kind of how it's boom bust, whatever. But like, remember, there's never been movies truly made about crypto over the last 50 years of our existence as a society. When you look back, go to Terminator, right? Like everything in our society, like we always end up at robots. We always end up at automating mundane tasks, and we will continue to do that. And as a civilization, as a society, like dealing with the labor supply issues for construction and why housing's so expensive, why new development's so expensive, is because the labor pool for construction is drastically shrinking. Do I think we will ever hit a point in my lifetime where construction workers will be robots? I'm 27. I'll probably be 50 something when that happens, maybe 60. I got the earliest, but that's a really long ways away. So
it happens fast. I just turned 50 this year, dude. It happens a lot faster than you think.
Yeah.
27 feels like kind of like yesterday to me in a lot of ways. That's when, that was my second year skiing in Utah, moving to Cincinnati. So,
for sure.
Yeah. But anyway, dude, I mean, and by the way, I never would have guessed, honestly. Your level of knowledge and wisdom and business savvy, and just poise and being able to talk about all this stuff, I would have had you at least a little older. Not a whole lot.
No, that's good. I love I love this job. It's not a job. It's a lifestyle for me. It's not a career anymore. It's truly, I love doing this. I love having these conversations. So again, I really appreciate you having me on, and hopefully we can do a deal or, collaborate some shape or form in the future. And
100%. I want to make sure that we got this just clear moving forward. So next steps for you guys in a real quick nutshell. What are you guys looking to do next?
We're really looking to take velocity to our retail development business and industrial and data center kind of business. I think for a lot of us, we do a lot of ground up. We're looking for value add stuff. We just don't see it in the Southwest a lot. Mm-hmm. So for us, we chase a lot of gas station, triple net, single pad development with some strip centers. Targeted markets are Vegas, Phoenix, Reno, and Tampa Bay. We got boots on the ground in every single one of those markets. We have a strong history in every single one of those markets. So I look at land for industrial, data, retail, or industrial. I said industrial twice because I love it so much.
Yeah.
And that's kind of it. Yeah. And so, that's kind of where we're at. Those are our markets, man.
Awesome.
That's what we do.
Awesome. Listeners, Andrew Dunn was our guest. Great stuff. Make sure you look him up, vacdevelopment.com, and find him on Twitter as well. Andrew, thank you so much. Really appreciate it.
Hey, thanks so much. Really appreciate it, Tate.
Yeah, thank you. Thank you, listeners. We will catch you on the next episode. Take care, everybody.
This has been The Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of The Apartment Gurus.